Hey guys, in this next chapter, we're going to be talking about the general journal. So, we learned about the different types of special journals that we have, but sometimes those journals don't have enough columns in them or the right columns in them to journalize the transaction that we have. And so we have this thing called the general journal. We used something like this in a prior chapter, but instead it was a multi-column general journal. So it had all of these additional columns. But here we just have the date, the account title, document number, post reference, and a debit and a credit. Okay, so in these corporations, they'll have the special journals, but then they also throw in this general journal. In a sole proprietorship, they usually just have a multi-column general journal. But we, for the sake of a corporation, use the special journals and then the general journal. And the general journal is kind of like a clearinghouse for things that can't be recorded in the other special journals. So we'll dig into the first one. For example, when we buy supplies on account, none of the other journals have what we need when we purchase something on account. And this is store supplies. It's not merchandise, so it can't go into the purchases journal because purchases are merchandise. So we need to put it in the general journal. We're buying supplies for the store. Maybe we needed pencils or we needed paper towels, things like that. So we bought store supplies on account from Estate Supply. So we know how to record something like this in T accounts. Bought store supplies, it's an asset, it's going to increase. And we owe them money, so we have accounts payable. We owe them that. So we go and we journalize it then in the general journal. We have store supplies as a debit and the accounts payable / who we owe it to as the credit. And the thing here, you see this diagonal line, it's because in the posting process, we're actually going to post this twice. One to the general ledger, to the accounts payable general ledger, and then second to the accounts payable ledger. So we find Estate Supplies and post it there, but we also post it in the general ledger. So there's two postings for this one, so we have a little / with the two. We need to post it in both places because the total of our accounts payable is going to increase, but the total of Estate Supply that we owe is going to increase as well. So, again, we just debit and do our normal debits and credits. The only difference is we now have two postings for an accounts payable because it's specifically to Estates Supply. So we put that little / in there. And that kind of shows the separation as well. Okay, first we need to post it to accounts payable, then we can post it to Estate Supply. And this is only because we bought the store supplies on account from them. The next section discusses purchases, returns, and allowances. Sometimes when we buy something, we purchase something, it doesn't work the way that we want it to. So we can either return it or get an allowance for it. Maybe they do like an exchange, something like that. And so if we ever want to return the merchandise, we need an account to show, hey, we no longer owe them this much money. Let's take it out of our side. If we're the one that did the purchasing, if we made that purchase, we say, okay, we returned, $200 worth of merchandise that just was defective, and we're gonna use this account and credit it because that's the normal balance: purchases, returns, and allowances. So we have this account: purchases, returns, and allowances. When we make that return, the normal balance is the credit. Okay, so we'll read the two definitions. Credit allowed for the purchase price of a returned merchandise, resulting in a decrease in the customer's accounts payable to the vendor. So we no longer would owe them that money. It shows that we returned something by using the purchases, returns, and allowances account, and we get it out of the accounts payable. We open this account up because we can't just zero everything out. Plus, we also want to look, hey, how much did we end up returning? Did we return $400 of the $600 from this company, and we keep doing that? Maybe we shouldn't buy from them anymore because we just keep returning stuff. And then the allowance. Credit allowed for part of the purchase price of merchandise that is not returned. resulting in a decrease in the customer's accounts payable to the vendor. So maybe they allow part of the purchase price of the merchandise to keep, something like that, just part of it that's not returned. They offer some kind of credit or allowance of some sort. Typically, accountants show this on a debit memorandum. So you have something like this that shows what was returned. So this is a purchase return or allowance should be confirmed in writing. A form prepared by the customer showing the price deduction taken by the customer for a return or allowance is called a debit memorandum or a memo. So it shows, maybe $43.90 is how much they're returning. They're returning 2 light bulbs and sending them back, and that's their return. On to the next page, which talks about how to journalize that. So here it is in a nice written form. We returned merchandise to Mobley Tools for $43.90, covering the purchases invoice number 528. So that was the invoice that we originally had where we bought a certain amount, but we want to return it. And so we take it out of the accounts payable that we owe Mobley Tools. And the normal balance of an accounts payable is on the credit side. I'll show you. We have accounts payable. This is the normal balance over here. And so if we're taking out $43.90, it shows a decrease. Let's say maybe we started at, $50. We owed them $50. We returned $43.90. So we're down to like $7 and some cents. Maybe it would be 10 cents. You get the gist. So then we have to show the increase in the purchases, returns, and allowances. So we journalize that as well. We just do the opposite. So not the opposite, but what was originally recorded, we had credited the accounts payable / Mobley Tools, but now we debit it. And then we credit the purchases, returns, and allowances. Make sure we have that little diagonal line when it comes to accounts payable and Mobley Tools because we want to take it out of both areas. Then we post to both areas. So the next section shows how we post from the general journal. So we bought store supplies on account from Estate Supply, and we returned some of the merchandise to Mobley Tools. So we start and we post from the general journal to the accounts payable ledger. Okay, so we come up here and we just post the amounts. We find first Estate Supply, and you go and you post it on there. So 2 is the date, G12 is the abbreviation for general journal. Then you put the credit in and a credit balance plus a credit entry. Then you come up here for the 220. Then you do the same thing for the next accounts payable, 240. The date, post reference, 43 was the debit, 43.90, and you subtract it out. Then you come up and post 240 is the post reference. Okay, you always do the purchase, you always do the accounts payable ledger first. This is the accounts payable ledger. Then you go through and post to the general ledger. So here they just have the first transaction. They show a posting to the supplies. We have the date, the post reference, the amount. A debit plus a debit is a debit entry plus a debit balance is what you do. Then you post 1550 up in the post reference. And you do the same thing now for the accounts payable. So this is now in the general ledger. So over here was the accounts payable ledger, and that's where you record it for the specific company. In the general ledger, you post just based on the accounts payable. So we come down here to the accounts payable, we put the date, the post reference, the credit, a credit plus a credit balance, We get the total, bring up the 210. So this entry always comes first, then this entry. This is standard practice. So you put the general account title, then the business, and that's the way you post. You post to the accounts payable first, and then to the specific account. That's how it's written, but you always post like this textbook is showing us. We posted to the specific account, then to the general ledger. So first accounts payable ledger, then the general ledger postings. All right, so tune in to the next video to do the work together problem.